Hello, this is John Piper with the weekend video clip, and it's Saturday the 28th of January, and we'll start with the Dow this morning, which I think is a definitive chart this week. On Tuesday, around here somewhere, I said that I was looking for 20,000, having seen this ABC decline, C down to there. The wave pattern unfolded rather nicely. That's 1, 2. That was in place when I made the report on Tuesday. Fantastic third wave up to there. Now got an A, B, C. So looking for a fifth wave to come in early next week, with a possible peak of possibly some importance coming in probably Monday or Tuesday. I go down a leg here because the wave pattern of this leg here is quite interesting as well. I should just expand this chart. You can see the 1, 2, 3, 4. So a fifth wave, to complete wave C of this ABC, early in the session on Monday, will set the scene for a final rally. That could be 100 points or so, so worth playing perhaps. But the big trade next week would be a peak coming in. If we see signs of a peak, what I would like to see is a failed break above this high here, around 2120, some kind of reversal. A 5 waves up for this move here would be ideal, of course. It's another thing I'll be looking for. But that would set the scene for a possibly significant decline. The big question is whether this 5-wave advance that I'm suggesting will be completed next week is just wave 1 of a bigger 5, or whether it might be the entire move, in which case we could see an important peak, which may in fact stand for the year next week. So pretty critical stuff, which I'll be monitoring very carefully going forwards. Right, the Dow is seeing similar action, and going back to the low here, just above 10,000 back in November. We can see the 1, 2, 3, 4, and now a 1, 2, 3, 4, fifth wave due to come in. So a more important pattern in many ways, because we haven't actually got an advanced 5-wave pattern. It's a fifth wave of a longer term fifth wave. So a peak above 11.9 on the DAX next week is something to watch out for. Again, same parameters. Ideally a 5-wave advance, failed break above 11.9, and everything will look pretty rosy for some kind of short position next week. So it could be the most important, well, one of the most critical weeks we've seen for a while actually. So I'll be monitoring it very carefully going into next week. Alright, turning to FTSE, we saw a peak come in here. The wave pattern is rather obscure from that point. Possibly this is a 1, 2, then a 1, 2, 3, 4, 5, 4, 5. That would allow a complete 5 waves. Third wave would be the longest from here to here. Not a very pretty count, but just about works. That would then give us an A to there, a B to here, and a C wave rally, maybe around 7220. I mean, this is around 7130, so 70 points to there. 7150 to 7220, A and C would be equal. That could be a 2-wave, so it would allow a similar conclusion to that seen on the DAX and the Dow. An imminent peak coming in early in next week, Monday or Tuesday, and then a sell-off coming in, which on FTSE would count as a third wave. On DAX and Dow would count as the initial beginning of a move. Nevertheless, it could be quite sharp. Obviously, 20,000 level is quite key. If that were lost on the Dow, then that might well bring in quite a few sellers. So again, that ties in quite nicely. Right, this is the 3-hourly chart of gold. We had the low back here. Now got 1, 2, 3, 4, 5, which is very encouraging. This looks like an A wave, so maybe B, C. It's possible this is a complete ABC, A, B, C. I don't want to be too optimistic though about it. The low came in around 11.25, 11.20.25, 12.20 to 100 points. So the 50% retracement level is quite simple, around 11.75. So that's one level to watch. Obviously, a Fibonacci 61.8% would be around the 160, 63 level thereabouts. If I see some strong movement up, I may well take a small short position. I mean, £10 a point, risking 10 points is a £100 risk, which in the scale of things is a very small amount to risk. I'm still looking for a 500-point rally, so there's still lots to play for as far as gold is concerned. I'm not sure it'll happen next week, but of course if we see peaks in the equity markets, then that may well fit in with a continued rally in gold earlier than I'm suggesting, because of this wave count. Right, silver. I reckon the Fibonacci retracement of the whole bull, well, what I'm calling a bull market, this thing here, is around that level there. They're not exactly precise, so we've got this big sort of A, B, C thing down to here. Possible 5 of it up here. Let's go down. This is a daily chart. Right, this is the 3-hourly chart. So we've got a low there. 1, 2. Well, let's say 3, 4, 5. Not exactly a very precise count. Definite 5 waves here. 1, 2, 3, 4, 5. A, B, C. So silver has seen an ABC decline, which could mean this is actually a new bull market starting up. Sorry, this could be wave 3 starting up. So again, we've got pretty strong reasons to buy silver at this point in time. So it's a question of just looking for the right entry point. I mean, the stop at 1660. It's just a question of your risk parameters, whether you think this is too big a risk. And of course, there is the problem that you have the peaks up here, which is resistance at this moment in time. Extreme stop above here, of course, would be one way of playing this. With extreme stop, of course, you've got to watch what happens when it goes through. You want to try and bail out if it quickly reverses, because that would be a failed break. Right, so quite a lot happening this week. I hope that's interesting and useful. I'll be updating you as we go forwards. I would expect to be sending a few SMSs to subscribers this week, because there's quite a lot going on, and there could be some big moves starting up. Have a great weekend. Thanks for listening, and bye for now.